If you've ever been confused about what candlestick pattern to use in your trading, or you've been trading candlestick patterns and it seems to not be working for you, well, this might just be the video for you. Welcome to this amazing video brought to you by Learnity. My name is Philip, and in today's video, we're going to be talking about candlestick patterns that every trader should know, and we are going to learn how you can identify these high probability candlestick patterns to use in your trading. In this video, I'm going to be sharing with you my two top candlestick patterns that I use every time and how I use them in trading the foreign exchange market. So I want you to pay maximum attention, put away every form of distraction so that you get the information I'm trying to cut across, so that you do not get confused on what candlestick patterns you need to trade, and you learn how to trade with candlestick pattern more accurately. So before I reveal to you the two top candlestick patterns I trade, let us first understand what a candlestick pattern is. A candlestick pattern is actually a pattern that is formed by candlesticks which have been found to repeat over and over again on the chart. Alright, so these candlestick patterns are patterns that we as traders have seen occur frequently. They have occurred times and times again on the chart, and then we map out these candlesticks and we want to trade in alignment with them because they have a high frequency occurrence. Now, there are different types of candlestick patterns. Trust me, they are numerous, but the ones we want to take advantage of are the ones that have what high frequency occurrence, which means they occur more often. All right, because if they occur more often, then this gives us the opportunity to leverage them and to want to trade them anytime they occur. But that is not to say that you just go into your chart and you just trade any candlestick pattern. You want to trade them with logic. You don't just jump into your chart and trading only just candlestick pattern. And that's why in this video, I'm going to show you how to apply logic and trade with candlestick patterns. Now, let us look at the first candlestick pattern that I trade. So the first type of candlestick pattern I love trading is the bullish and bearish engulfing candle. Right, this is a double candlestick pattern that I trade frequently, and they occur very often in the foreign exchange market. And in a minute, we're going to dive into a live price chart, and I'll show you how to apply them with logic. All right, not just trading candlestick patterns for candlestick pattern's sake. All right, so the bullish engulfing candle is actually when you have a bullish close engulfing a bearish candlestick. All right, we are going to see all of these in a live price chart, but for now it's just me explaining them to you. All right, so the bullish engulfing is just that when it's just that candlestick that engulfs a previous candlestick which is formerly bearish. All right, while the bearish engulfing candle is simply the opposite of the bullish engulfing candle. So let us dive into a live price chart and see how this looks and how we can also apply logic in trading them. All right, so we have the price chart of Euro USD over here, and I'm going to show you guys how you can actually apply this bullish and bearish candlestick pattern. But in this example over here, I'll be using the bullish candlestick patterns, right? And the reason is because we are actually in a bullish trend on the Euro USD, and that is why I am applying the bullish candlestick pattern in this scenario. Now, remember I said you don't just go into the live price chart or your trading and start trading or start looking for candlestick patterns. You want to give them narrative and you want to use logic in trading them. All right, so that is why I am not just jumping into the chart and looking for any type of pattern. First, I want to understand the trend of the market. For this example, we have Euro USD, and the first thing I do when trading with candlesticks or anytime I'm trading is understanding the trend of the market. So I want to understand if it is bullish, if it is bearish, or if it is consolidating. Now, after I identify that, I frame up a narrative. What is narrative? Narrative is simply, is price currently retracing or is it expanding away? So we know in a bullish environment, price is going to be making higher highs and higher lows. So I want to know what the current situation of the market is. Is it retracing into a key level, into a support level, or a resistance level to continue going higher, or is it, or has it already done that retracement and it is expanding higher? That will be my narrative. Once I get these two aligned, I can now go in marking out my key levels, my support or resistance level, and looking for this candlestick pattern. So that is simply what I do with this. All right, so in this example here, we already know that Euro USD is bullish, and we have evidence of that because we have new highs being created and old lows being rejected. All right, so we can see over here we have a fair value gap. we have this fair value gap over here. A fair value gap consists of 3 candlesticks. All right, the second candlestick forming a gap between the first and the third. Right, we have this fair value gap here, and we saw price expand away from that. So when we see we have this fair value gap here under the narrative that we are bullish, all right, and we have seen price expand after hitting this fair value gap, we now have another fair value gap here again. And one amazing thing about this fair value gap is that they act as what support or resistance level. When you see fair value gap, just think basic support or resistance. These are key levels that can act as what support or resistance. Now in this narrative, all right, we are bullish. We are seeing fair value gap hold. All right, now this should be our support level. Once we see price trading into this level, we can now drop down into our entry time frame and start looking for what our bullish engulfing pattern, because we want to buy. All right, you want to buy in a bullish market and you want to sell in a bearish market, and that is another reason why you should not be looking for bearish engulfing patterns, even if they do occur in bullish markets. All right, you want to always trade in line with the trend, because the trend is your friend. And so we can see we have this bullish engulfing pattern here on this particular support area, which is a good opportunity for us to buy. Now if you want to enter this, you can enter it in 2 ways. You can either enter it after the closure of that second candle which has engulfed the bearish candle over here, or you can simply use a limit order and set it at the previous candle's high, wait for it to trigger, and then you can enter. It is really simple, right? That is how I use the bullish or bearish engulfing pattern. So this was a bullish example. You can invert this for a bearish example. All right, if your trend is bearish and you have seen a narrative or as to why price is going to continue going lower, then you can simply start looking for your bearish engulfing patterns on key resistance area. So this is the first candlestick pattern I trade. Now let's go into my second favorite candlestick pattern. But before I dive into my favorite second candlestick pattern, I want to let you know that at Learnity, there is currently an ongoing rewards program that you can participate in. All you need to do is use the link in the description below. Head on to the Learnity homepage. Make sure you sign up an account, or if you do have an account, all you simply need to do is log in, come to this reward section area, click on it, and then you'll be taken to the reward segment. And in this place, you can participate in the rewards program ongoing at Learnity, and you can get a chance of gaining amazing prize like cash reward, trading vouchers, trading bonuses, and so many other amazing gifts and bonuses. All right, so all you simply need to do is come here, watch these amazing videos. Once you've exhausted watching these 3, you can always click on load more videos and watch as much as you can. All right, now these are educative videos of which after you watch, you get Learnity tokens, of which you can later use to get your Learnity badges and then redeem them for your gift. All right, so it's pretty easy. Come here, watch this video, get the Learnity tokens, convert them to Learnity badges, and then you can use them to redeem your gifts. So use the link in the description below to get started. Now my second favorite candlestick pattern that I trade is the bullish and bearish pin bar, and we are going to see how I use them on the live price chart right now. So on the same chart on Euro USD, we can also use the same analogy we use for the first pattern, which is the candlestick pattern, the bullish engulfing candlestick pattern. Understand your trend, understand the narrative, and then look for your pattern. It is pretty simple. All right, once you've done this a lot of times, once you've done this enough time, you would get it very easy. So as usual, we've identified the trend. Once you know your trend, you identify the narrative. All right, is it retracing into an old high or an old low, and the rest of that. All right, and then you can understand it. So in this example, we are going to be finding or utilizing this. All right, we're going to see if we actually have that, or we actually saw that here. Remember, the narrative was what? Bullish. All right, we are bullish, so we have a key support level here, of which we can now dive into our entry time frame. All right, for this example right here, we saw the bullish engulfing candlestick. So we are currently on the pin bar, bullish and bearish pin bar pattern. Now what is this pin bar pattern? It's actually a pattern that has more wick than body. So the wick is usually longer than the body. Now the color of the candle does not really matter. What matters is where the wick is at. All right, so if you have a lower wick that is larger than the body of the candle, that can be telling you that price is going to continue going higher. But if you have a higher wick larger than that of the body, then that is telling you that price could continue going lower. So in this example, we cannot really see that pin bar candlestick pattern over here, but we can see that we have this one here, of which did not really occur at that level. All right, so it occurred in this day, of which our key support area was this fair value gap plus this old high. So we are precisely looking at it on this day when price is actually hitting it, and this was happening before that day. All right, so we can not really use this as our candlestick pattern, but then because we want to see it drop into that support area. All right, but we do have another pin bar here. We can spot another pin bar here. Now when you spot this pin bar, it is important for you to note if this is in a key support level. All right, so let us see if that is in a key support level. We have what? This old high. All right, price broke above this old high, which means that this old high could act as what? Potential resistance. And we also have a fair value gap here. All right, so to refine that, we can use our fair value gap for refinement of that support area plus the old high, and we can extend it, and we can see that that is actually where price is into at that point in time. And also it is also what colliding with our pin bar. All right, so we have this pin bar here, and we can see if we should measure the body and the wicks, so we can use this. This is the body of the candle, and this is the wick of the candle. All right, so we can see that the wick is relatively larger than that of the body, so this could work. Now, how do you trade the pin bar? All right, you don't just see the pin bar and just go in immediately. You want to wait for price to trade above the high of the pin bar after it closes. So once we see this occur, we are waiting for price to trade above the high of this pin bar candle, and once it trades above it, then we can enter. After the close of that candle, our stop loss goes below the pin bar low, and we can start targeting for our highs, because we are trading in what? The directional trend. So we can start targeting for relatively equal highs, or to hold for price to expand away from previous highs. Right, but in this case, we see that we get to this point and then price reverses from there. So you could have taken partial profits, locked in your profits, or move your stop to break even, but in all, you would have gained something from this move. All right, so basically that is how I trade using the pin bar and the bullish engulfing candlestick pattern. So now, if you want to learn more about this narrative and idea, and how to frame narrative and idea, and how to understand the trend of the market, we actually have a ultimate course that we have created that encompasses all of this: how to frame your idea, how to frame narrative, how to use all of this, and especially these candlestick patterns, how to use them in alignment with this pattern. So if you want to purchase the course, you can simply use the link in the description of this video, get onto the Learnity's homepage, and get any of the ultimate forex course for beginner. So here are some key things to note about using these candlestick patterns. All right, these candlestick patterns are best traded on the higher time frame. All right, like the 4 hour, the daily, the 1 hour. It is not relatively ideal that you use them on the 1 minute, 3 minutes time frame. All right, because you want to get your narrative. But depending on the type of trader you are, you can also use them if you understand narrative and you understand your order flow and you understand all of this that you want to do. Right, also they can be used as entry patterns. All right, they can be used as entry patterns and also used as a narrative. That can also be used to frame narrative. All right, and next thing is that they can be used in alignment with other trading strategies like support and resistance, fair value gap, order blocks, anything you want to use them with. They can always be used in alignment. They can be used as confluence to other strategies. And last but not the least, they are not a standalone strategy. All right, so just identifying a pin bar or a bullish pin bar or a bearish pin bar is not enough. That is why I said earlier, you have to understand how to get your narrative. You have to understand how to frame your narrative. All right, understand the trend, understand order flow, and all of that. And if you cannot, or if you do not know how to understand this, or you do not know how to get a narrative from the chart, then I suggest you go for the ultimate forex course for beginners, because this has already been put into this course so that you'll be able to understand how to frame narrative. And so before I go, it is with due pleasure that I present to you our 5-day free forex training program ongoing at Learnity. So if you're a beginner, you're just getting started, you need something to get you started, You can register for the 5-day free forex training program by using the link in the description below. Make sure you use the link in the description below to save your spot. Sign up, save your spot so that you do not miss out on this educative and informative 5-day free forex training program for beginners. And so guys, this is the end of this video. Remember to follow us on all our social media handles, and if you have gained something from this video, do also give this video a thumbs up, and do not forget to click that subscribe button to get updated on any new content we post on this channel. And until I see you guys again, remember to always trade well and trade safe.